Hi, it's Adam Hewison coming to you as always from the digital studios of Market Club. And today I'm going to show you a way to get rich slowly in Forex. I know it sounds a little strange, but I want to show you using just one triangle how you can trade in the euro against the dollar, as a matter of fact, and this is the symbol EURUSD. Look at the cash market. It's a daily cash chart going back to 2001 right here. As you can see, the euro has been going up and the dollar in essence has been going down. So I'm going to show you by just putting on our simple trade triangles, our monthly trade triangles, how you can trade this market and get rich slowly. So here we are. We've just put in our trade triangles, monthly trade triangles. And as you see, they don't occur that often. You're talking about over a space of 2001 to 2009, let's say over 8 years, you're only talking 12 trades. This is something you don't have to look at closely. You can see the catch is the big move here, all the way up to here, all the way down to here, and up again. So what we're looking at is when we buy the euro here, we're looking for the dollar to go down, which it did do. And then when we sell the euro, we're looking for the dollar to go up when the euro goes down. Just the inverse relationship. But here we are. We're long dollars right now. You can see from 137.38, the market's 148, acting very well. And I want to show you these different trades and what they mean and how you can use this similar approach to make money in Forex. So we'll take everything off the screen. Now here's the first. We're going back to as much data as we have. It's almost 8 years, 9 years. But the first signal was on the January 25th at 87.29. And that was of 02. So you can see the next signal here was in April 1st at 90.49. That produced a loss. But this trade here to up here produced a gain that was substantially larger than the loss and put you in the plus column. There were several trades. As I said, there were a total of 12 trades. There were 7 wins and 5 losses. Okay, that's a 58% winning percentage. Now many people want to be in the 80% range, and yes, that's okay. But the reality is, how much money did you make? I think sometimes the less you trade, the better off you are. This is type of approach using our monthly trade triangles, which is right here, and right here is longer term and in some ways very conservative because you're not getting in and out of the market. Now you are going to take losses with this, as you will with any particular market. But the reality is over time, and this is over a course really from 02 to 09, sort of 7 to 8 years, you're talking about a substantial amount of time, but it's also kept you in the profitability zone because you would have made in this trade 6,383 pips. Now pips are usually worth about $1, but when you look at Forex and you look at the multiplying fact, because you can go with Forex, you can go 50 to 1, 100 to 1, and even 200 to 1. Now this is obviously the extreme, and this would be on an okay basis. But the reality is, if you're doing 100 to 1, that means for your leverage is for every dollar you put up, you borrow 100. You can see how you multiply this out to be a substantial amount of money, $638,000. But the reality is, that's how the markets work. And if you use this approach, this monthly trade triangles, you will make money. So this is Adam Hewison. I'm coming to you from the digital studios. How to make money slowly in Forex. You can apply this to the Swiss franc, the Japanese yen, the Australian dollar, the New Zealand dollar, any currency you want. In fact, take a look. Run it through the numbers. If you remember, run it through the numbers and see what you think. It's a long-term way to trade foreign exchange, and it's one you should be looking at. Thanks for stopping by. Every success.